I think it's really important for people to understand what I call venture math. So if you look, for example, at 500 or a YC, we have the best seed investment, kind of performance in the world. If you look at how you get to that level of performance, we see tens of thousands of applications or kind of pitches every single year. We make 200 to 300 investments every year. Of all of our investments, 1 to 2, maybe 3% become unicorns. So that means we're only investing in 1 to 2% of what we see. And then 1 to 2% of that is what you see become massive winners.
Support for the show comes from Capital.com, a global investment platform that is becoming local. They've recently opened their offices in Dubai, which means they are locally regulated and provide local banking solutions. If you are a new investor, you can visit Capital.com's website to browse through their learning materials. And if you are an experienced investor, you can benefit from Capital.com's news and analysis so that you're able to make better and more informed decisions. Check out Capital.com, that's CAPITAL.com, and start trading today. Hi, everyone, and welcome to Conversations with Loulou. Before we start the show, I have an ask. If you haven't done so already, please subscribe to Conversations with Loulou wherever you're listening to or watching this episode. And if you are in a podcast app like Apple Podcast or Spotify, please leave us a rating and spend a few minutes to write a review. It really helps in getting the show discovered, and that would make me extremely happy. So thanking you in advance. My guest for today is Courtney Powell. She is the Chief Operating Officer and Managing Partner at 500 Global, which is a venture capital fund and startup accelerator that has invested in over 6,000 entrepreneurs operating in 90 countries. In addition to investing in startups, 500 Global runs programs for angel investors and first-time fund managers to get them introduced to the world of startups and investing. In this conversation, we're going to learn more about investing in startups across the world, talk about the opportunities here in MENA. We're also going to talk about women in tech and much more. Courtney, welcome to the show.
Thank you so much. I'm really excited to be here.
Thank you for flying here to do this.
No,
I feel honored.
I've been really looking forward to it, and anything we can do, as you said, to put more of a spotlight on entrepreneurship across the region and globally, I think is a wonderful thing. So it's an amazing platform you've built.
Thank you. Thank you. And I agree. So why don't we start maybe with, just in your own words, for those of you who are not familiar with 500, can you just tell us a little bit about 500 Global and your work, particularly in this part of the world?
Sure. So 500 Global actually started as 500 Startups, which is still a name that a lot of people know around the world.
Yes.
The firm launched in 2010. Actually, we're coming up on our 14th anniversary next month. In 2010, we started in Silicon Valley, and the initial concept behind 500 was actually really to pull together operators who had successfully run businesses and who wanted to fund other, credible investors. So the company launched out of Mountain View and was primarily investing, in the first, kind of year or so around the Bay Area, which was still kind of relatively new for seed investing at that time. And certainly the accelerator model, had been pioneered by Y Combinator. And then we had Techstars launch a few years later. And then 500 came on the scene really with a focus on distribution and growth. But pretty soon we had raised our first fund, which was about 29 million. So a relatively small fund compared to our funds today. But we made a really kind of fortuitous decision, which was we felt very strongly, the founders felt very strongly that 500 wanted to invest in the best entrepreneurs globally. And we felt like there was just a huge disparity in the amount of capital that was being invested in the US versus what was being invested abroad. And we felt like that was a really unique opportunity, both financially and because it was a part of kind of the evolution that we wanted to see in the world. So we actually acquired a firm out of Mexico in 2012, 2013. And then pretty rapidly from there started building out funds all around the world. We made our first investment in the Middle East. It would have been 2012, I believe, into a Jordanian company, and I'll try and remember the name. And then we launched our first fund in the Middle East in end of 2017, early 2018. So today, 500 is investing in 92 countries around the world. We invest all the way from seed to pre-IPO. We're managing about $3 billion in AUM, and we've made nearly 3,000 investments worldwide. And we feel really kind of strongly still about our, ideology of investing worldwide into great founders. If you look at the almost 50 unicorns in our portfolio, nearly half are from outside of the United States. And so in 2020, we changed our name to 500 Global to represent the fact that we were going to continue to build, go down later stage, and continue to invest worldwide.
That's amazing. Definitely want to talk more about that, but I want to pause here for a little bit and talk a little bit about your background and how you got into this world of investing. So my understanding is that you were an entrepreneur as well and a builder. And can you tell us a little bit how
Sure.
that started, that journey with 500 started?
Yes. So definitely one of my favorite stories to tell. So I'm from Dallas. I'm from Texas originally, born in Dallas, and I went to the University of Texas for college. And around the time I was going into my sophomore year, I decided that I wanted to get into business. Mm-hmm. And so I started looking on Craigslist for a job that would hire somebody who did not yet, have a degree. And I ended up meeting two gentlemen who were launching a tech startup. And the startup was called Boundless Network. And the idea was, corporations like AT&T, all the big companies, mm-hmm. they buy pins and koozies with their logo on it. Mm-hmm. It's a huge business. And these guys wanted to actually build a software platform behind that to help aggregate purchases across multiple big companies. So I really had no idea what that meant at the time, but I was like, okay, I think this sounds, unique. So I joined. The company went on to raise about $50 million in capital and was ultimately acquired by Zazzle. And for me, it was really amazing to be one of the first employees to get to see literally the idea. I can still see it in my head, go from a yellow legal pad, creating the pitch decks, doing the pitches, et cetera, to a massive company that, eventually saw a really fantastic exit. So from that point on, I had the bug. I was never going to work for anybody else after that. I had 5 years at Boundless, and then I went on to start my own companies. First, a marketing automation consulting firm, which was a really good lesson. I think running a consulting firm will teach you so much, mm-hmm. About marketing, about management, and all of that good stuff. And then I had this really kind of unique experience, which was as I was getting ready to move in the U.S. When you are putting in kind of a TV or a cable modem at the time, you would rent actually the equipment from the big company like Time Warner Cable, for example. Mm-hmm. And as I was moving, I got a notice from my bank that I had $900 drafted out of my account for not returning a cable modem during my move. And I was like, no, I definitely returned that cable modem. And I got really upset that I had this complaint and the Time Warner Cable wouldn't resolve my complaint. So I started looking for other people who had similar complaints. Ultimately, I found that there was quite a few. And lo and behold, I decided to start a company to help aggregate complaints across the internet. So this was called Public Demand. I spent about a year raising $250K, I think, in Texas. And then I heard about 500. So this was right around the time 500 was starting. And I had to figure out how to get into the accelerator, which at the time was in Mountain View. There was only one. There was no application process. There was maybe, 4 or 5 employees at 500. And I eventually, met the co-founders, met Christine, and I became a part of the 500 batch 4 in Mountain View. They invested in my company. I moved to Silicon Valley. I ended up raising $1.2 million in, I think, 6 weeks, with their help and kind of the power of that network. And that's how I first, got to know 500 and then stayed close to the team. And as I kind of went up to run my own companies and do other things, full circle, 10 years later, Christine asked that I come back to 500 and help them to scale the firm even more, beyond what they had already done. And in particular, with a focus on moving into new markets around the world.
Okay. Did you continue your studies? Or did you just decide to work?
I dropped out my senior year. Okay. So in true Silicon Valley fashion.
No, that's great. I mean, that should be a part of the story.
Yeah. At some point it was funny. It's like I was traveling at the time for Boundless. We were opening up new offices. And I, was a mom. I was just working.
You were a mom at the time as well?
Yeah. So I was working full time. I had, taking care of a child, just all of it. And yeah, at some point I was like, well, I'm kind of making more money than then it makes sense for me to perhaps keep going in school. But I'm an academic at heart. If I could just do nothing but study and learn, I certainly would.
I mean, you are learning, on the job
true.
every day.
That is definitely true. Every day here.
Which is very important. How do you feel, by the way, the attitude towards academics is at the moment? How important is it today vis-a-vis, 10, 15 years ago?
Yeah, I mean, it's just so different today because, the accessibility of education and information is just completely different. 20 years ago, it would have been very difficult to be able to learn specific skill sets online, right? Maybe 20 years ago, you could just start to do that. But today, I mean, you can go online and take courses in any number of things, receive a certificate from, well-known universities all around the world in the form of continuing education. I still think that there will be a place for more formalized education. I think in the future, it will probably be relegated more toward highly technical fields where there still needs to be...
That AI can't do.
Well, I mean, not just that, but I think there's still an apprenticeship model that makes sense in a number of fields, right? You want a doctor who has been there, done that, gone through not just the kind of, the book learning, but also, a really rigorous program and really rigorous oversight before they're operating on you. So certainly I think there will be fields where a more traditional education is going to come into play. And I hope that there is always a strong emphasis on the arts as well for people to have the chance just to study the arts, to continue, our culture. I think this is really important. And I think formal, education related to that can also be helpful. So I think it will evolve. EdTech is something that I personally really love to see, especially in emerging markets, because I think just we're still in many nascent and emerging markets around the world, access is still a problem. And so I think there's a huge opportunity for technology to come in and really not only provide more equitable, access to education, but also much more customized learning. I think, we need to see an iteration on the methods, perhaps that are being used. And I think AI is a great way that we can start to deliver more personalized education for sure.
Yeah.
So it's a mix, right?
Yeah, I mean, just 2 comments on that. You said you have young kids. I mean, I have young kids as well. And I always wonder, what is the education system going to look like in 10, 12 years when they're gearing up, to kind of leave school, high school, and get into university.
Yeah.
Would it still look the same? I mean, AI is moving so fast. Yeah, I mean, you have a tutor in the palm of your hand, basically, that can teach you in a much more custom and much more powerful way. So,
absolutely. And I mean, my children, for example, they don't use browsers, right? They will search things on YouTube or ChatGPT, sincerely. They don't use web browsers anymore.
ChatGPT is amazing. I mean, I use it so much now. It's incredible. So, and it's moving so fast. So 2 years down the line, where we're going to be. Mm-hmm. The other question I wanted to ask you is, around your background is on your startup. So I also understand that you ended up shutting down the startup that 500 startups basically invested in. Yes. How was that? How did that happen? How was it on you? That decision process.
Yeah, this is a topic I really like to get into with entrepreneurs. Not because I'm encouraging anybody to necessarily shut down their company, but because it's just a reality of entrepreneurship. And in fact, if you look at, I remember looking at a study recently, the median age of a successful founder, meaning they've kind of reached an exit event, it's 35 years old.
Yeah.
But the median age of somebody getting into entrepreneurship is in the young 20s, which means that there's a pretty big age gap between when you're first starting and kind of the iteration of companies it usually takes to get one, right and kind of, see it through. So the company that 500 invested in was called Public Demand. And as I mentioned, it was really...
The complaints aggregator.
It was meant to help consumers. It was meant to empower consumers. Well, as we were iterating on the business model, what we found in particular, and this kind of comes back to where your question came from, was that the easiest way for us to make money was actually to, if corporations wanted to pay us to stay off of our platform. And that was not the reason,
okay.
That I wanted to run the company.
That was the business model.
That was the ultimate business model that kind of seemed to work. So we needed to take it more of an enterprise route. And it was just not something that I felt like I could see having, number one, kind of healthy incentives long term, or something that I was particularly passionate about. And what I tell founders all the time is there's multiple risks, obviously, to running a company. But the greatest risk is the founder's energy and the founder's psychology. And you have to have both to be able to successfully certainly see a company through scale, let alone kind of see it through success, or ultimately, maybe turn it over to another leadership team. But there comes a point in every entrepreneur's journey where they really have to ask themselves, number one, have we found product market fit? Is this, is the product resonating? Is the business model actually scalable in the way that we as venture capitalists think about a scale? And are you as a founder still energized to see that business through? If all three of those aren't a yes, then you kind of need to figure out what the next step is going to be.
Yeah.
Within Silicon Valley, it is, very much accepted that, we invest, it doesn't work out, founder takes some time off, and they kind of start again. But when you are a founder going through that process, it is deeply, deeply personal, and I think can feel very shameful. And that's definitely how I felt, as an entrepreneur having to make that decision. And I remember taking, a week to write an email to all of, the investors who had invested in my company, telling them, kind of this whole long story of what happened and why I'm making this decisions. And we get these emails today. And I'll never forget, a very famous investor responded back to me, and he was like, "Don't worry about it. Get back up on the horse." And that really kind of stuck with me, because he'd invested quite a bit of money with me. We'd obviously lost it. And he was just like, you know what? It happens. Keep going. And I think obviously we all want our businesses, to work out and become massive winners, but that's not always what happens. Yeah. And you need to be able to kind of rationally think through where you're at. And then as long as you're communicating with your investors, with your team, with, whomever your stakeholders are, obviously your customers, that is really what is important during the process of deciding whether or not you continue. Certainly within this region, I think we're still coming to the point where we need to normalize the fact that not every business is going to work out. Yeah. I think it's really important for people to understand what I call venture math. So if you look, for example, at 500 or a YC, we have the best seed investment, kind of performance in the world. If you look at how you get to that level of performance, we see tens of thousands of applications or kind of pitches every single year. We make 200 to 300 investments every year. Of all of our investments, 1 to 2, maybe 3% become unicorns. So that means we're only investing in 1 to 2% of what we see. And then 1 to 2% of that is what you see become massive winners. If you kind of think about those numbers and the scale it takes to be one of the top investors in the world, then you realize really how difficult entrepreneurship is. Yeah. Therefore, starting a company, having to shut it down, having to try again, it's part of the game.
You moved to the region recently.
Yeah, I did. So 3 years ago, actually, it's actually 3 years next week, I moved to Saudi. And it's been sincerely one of the most beautiful experiences that I've ever had.
Tell us, more about that. You're coming from, the heart of innovation in Silicon Valley, and right? That's where you were before.
So I was living in San Francisco. Okay. And I visited Saudi for the first time, not just Saudi, Abu Dhabi and Dubai, Saudi in 2019. And I had very little awareness personally of the region prior to that. But 500 had a long relationship in this region, because we've been investing for so long already. And then in 2018, the Crown Prince of Saudi Arabia actually visited San Francisco. And he met the co-founders of 500 and other prominent VCs at that time. And as far as I know, that's what initially kind of turned 500 on to considering, the region in a much more serious way. We ultimately ended up launching a fund here that, invested in, over 100 companies across the region. And then by the time I visited in 2019, I could see firsthand that the region was really starting to go through a renaissance in the sense that, you have really kind of thoughtful governments who were looking to prioritize entrepreneurship, looking to push, big dollars and big kind of resources and support into facilitating the acceleration of the ecosystem itself. You also have just geographically, if you think about the Middle East, it's very strategically positioned in a number of emerging markets, around the world. And we actually did a study and we looked at, we as 500 are going to be scaling even more. What are the top 30 markets around the world that we're most interested in? Mm-hmm. What makes sense in terms of the demographics, the population, the digital Wi-Fi kind of penetration, the GDP growth, and the Middle East, both the UAE as well as Saudi Arabia ranked very highly in that list. So, having had an actual office in Saudi Arabia since 2018, coming here and seeing it firsthand myself, knowing that Vision 2030 was very real and, moving at a much more rapid pace than what certainly anybody in the United States understood, we felt like there was a real kind of competitive advantage and opportunity to doing even more in this region. But we only wanted to do that being hyper-local. So, I think some people think of investing in emerging markets as kind of a fly-in, fly-out model. That's not 500's model. 500's model is hyper-local and globally connected at the same time. Mm-hmm. So we wanted to see teams built across the region, which today, we've done. We have more than 20 people across the region today. We have offices in Cairo and Saudi, soon, hopefully, in the UAE. We've had an office in Bahrain previously. And I was just really compelled by what the sovereigns were doing to foster entrepreneurship. Yep. And we were seeing the deal flow. That's the most important part that I love to tell investors around the world. If you look at our first fund, we invested in the region. It was a $33 million fund. We had 180 positions in that fund. Today, we have 14 companies valued at over 100 million in that fund alone. And we have 6 companies that we're looking at for exit potential. So that in and of itself, I think, is a great story of, an early fund in the region having done well. And today we have 4 funds now in the region.
That's amazing. Mm-hmm. Where else did you look at? You said there were several markets around the world that were very interesting. What are the other pockets?
So we're really interested in what's happening in Southeast Asia. Like we've had funds, I'm not sure how many, 3 or 4 funds now in Southeast Asia already, but in particular, Indonesia is really interesting. You have a good kind of population, young demographic, a lot of technical talent coming more and more from that region, from Vietnam. And already kind of Singapore and Malaysia had their own kind of rapid development as well. So we're doing a lot in Southeast Asia. We have a new strategy coming across Africa as well. So across the continent, we've already made 100 investments across the continent, but I think you'll see a lot more to come from 500 across Africa.
Okay.
We're doing a lot in the Caucasus, kind of Central Europe and kind of Eastern Europe as well.
So all over, really?
Yeah, 92 countries. That's like pretty much
all over.
Yeah.
How do you do it usually? Like, how does 500 enter a market?
Yeah.
So obviously, you said you look at GDP and demographics and so on, but you find local partners usually, right? Like, how does it work?
So today, it's definitely evolved. When 500 first started, it was much more. It was a little bit less formal than what it is today. But today, we actually have a team that is called Market Strategy. And as I said, we go in, we study markets, we look at all sorts of different indicators in those markets. At this point, we can just even look at our own portfolios to see what the pipeline is, what the application rate is, kind of how the growth rate is changing over time. And then we look at what other strategies are already being invested across the region, what we can see that's working, what's not working. And then I think the thing that's really unique about 500 and why we've done so well around the world is because we have a very long-term commitment. So when we enter a market, we want to be there for the long haul. And because we invest around 50% of our capital in nascent and emerging markets, then we take very active partnerships with the governments, with the sovereigns, with other key organizations to ensure that we're not just bringing capital, we're also bringing capacity and development as well. So we will contribute on the policy side. We will work with the education kind of system to help ensure that there's skill sets that are kind of lay the groundwork for entrepreneurs moving forward, for investors moving forward.
Okay.
We work with corporates. We have this whole approach to contributing to an ecosystem. In addition to that, we typically will have a team from outside of a particular region, if it's new, come in and help get things started. But ultimately, we want to see people from that region, from that country, leading 500.
Yeah.
That is what we want. And I think the Middle East is a wonderful example of, our team are people who have been contributing to these ecosystems, for more than a decade.
Yeah.
And we want sustainable startup ecosystems. And, we want to be able to foster that. But as I said, it's really a hyper-local focus, not a fly-in, fly-out model.
Well, you have a fantastic leader in Riyadh, Amal Dukhan. She's truly brilliant. I attended the demo day last year. Actually, I didn't get the chance to go this year, but I went last year. I was blown away by the quality of startups, the quality of the pitches, which I really think we should talk about as well, because the pitch quality was amazing.
I sincerely believe 500's pitch training is the best in the world.
Yeah,
really.
Yeah. So we're definitely gonna talk about that. But I think in terms of local leadership, obviously Amal's doing great. So I can see how you work together with people from the local ecosystems.
And we have Amal Anan in Cairo, who's also fantastic, based in Cairo. We have a few partners we haven't announced yet, but we will, from across the region.
Yeah.
And I'm just incredibly proud of our team and, one of what we call our global managing partners. So there's 7 of us at 500 who primarily own the firm today. Myself and the 6 others who are based, some in the US, some in Southeast Asia, some in, kind of Eastern Asia. We felt it was really important for us to have this kind of geographic distribution given our portfolio and our strategy. But one of the partners who's been really heavily involved in the Middle East alongside of Amal is Beji Yang. She's also just been an incredible leader kind of behind the scenes in facilitating a lot of what we've done across the Middle East.
So you are in charge of that global expansion as COO.
Yeah. So my kind of purview as COO is I like to tell people I think about the business of 500. And the business of 500 is launching funds around the world to be able to invest into fantastic entrepreneurs from the first check to the last check. So that might involve, launching a late stage fund in Southeast Asia or a seed stage fund in Europe. It really depends on what the strategy kind of calls for. And I spend a lot of time with key stakeholders, with governments, with those who, invest in our funds and our strategies, articulating the value of entrepreneurship as it is a means to contribute to GDP. There are interventions that have worked, what we call interventions that have worked around the world to help facilitate and speed up the development of an ecosystem. So let me give you a real example from the region. The demographics and the ingredients have always been here in the region, but for a long time, what was missing was the regulatory frameworks to be able to launch more sophisticated companies beyond e-commerce. We love e-commerce. We're huge e-commerce investors. But to be able to see fintech really flourish, to be able to see health tech really flourish, if you want to see crypto come online or digital assets, then you have to have regulatory frameworks to be able to support that. I think, the UAE in particular has done a fantastic job of, kind of getting the sandboxes out there. ADGM, I think, is just such a an underrated story for a really successful regulatory regime that has, allowed companies from all around the world, not just locally, to start quickly, to start easily, relatively low cost. That's just one example, the regulatory framework that's needed. But the other example is just from having both a top-down spotlight on entrepreneurship, celebrating entrepreneurship, as well as making it easy for the groundswell to take place, by making things transparent.
Is there a risk that it might become too hyped? You hear people saying, it's too hyped up, and then you have a lot of people coming into entrepreneurship thinking this is going to be a glamorous ride.
I mean, I think
facing reality.
It's two different. That's kind of two different questions, right? Definitely, there has been a risk that entrepreneurship, or venture capital for that matter, is much more glamorous than what it is. My favorite quote, forgive me for saying this, about entrepreneurship is Ben Horowitz's quote from, The Hard Thing About the Hard Things.
Yeah.
And he says, being a CEO is wanting to get up and throw up every single day. And I'm like, yeah, that is what it is. And I think, perhaps if you haven't been through the ups and downs of, raising money, not raising money, hiring people, firing people, just the day in and day out grind, you may miss, that it is more glamorous than what it is. We both know that's not the case.
Yeah, no, I mean, I'm a huge proponent of entrepreneurship. This podcast, this entire podcast, the goal of it is to get people excited about entrepreneurship, to learn more about what entrepreneurs go through, and also to work with entrepreneurs. So when this entrepreneur is coming to a big corporate and pitching them their business, I want that business to work with the entrepreneur and give them a chance, because that was one of my biggest challenges, launching a business here. I mean, obviously, times have changed a little bit, but working with big companies, getting customers was always very, very challenging when you are a startup.
Yeah, it's really hard. And especially, I think, from somebody who has worked in corporate development and developed corporate development programs, et cetera, it is a really tough line to walk. Usually, I think the incentives are off, between corporates and startups.
Yeah.
But certainly today, I think there's much more awareness around the fact that innovation is something that's really hard to do within a big company.
Yeah.
And so they're more, likely today to be able to work with startups. And in this region in particular, I think we had some kind of interesting players who wanted to do partnerships pretty early. But now you're starting to see the banks really come online all around the region, looking to facilitate their own kind of fintech programs and corporate innovation. You have e-commerce here, which has always been huge. I'm starting to see a lot in the beauty space, which is interesting as well. Okay. So, I think corporates in the region in particular are starting to really wake up to the fact that partnering with startups early is, a fantastic thing if they do it correctly, as you said. Yeah,
I think these are the types of conversations that, if you're having discussions with policymakers and with corporates, I think these are the types of conversations that we need to have. Because I think there isn't a lack of talent here, and the kind of the groundswell that you were talking about. I think there's a lot of people interested in entrepreneurship, despite it being extremely challenging in this part of the world.
There's a lot of interest. I do think I'm very happy to see the talent develop over the last several years in particular. I think the last 3 years in particular, especially in Dubai. Dubai has done an incredible job of really being open and inviting, talented founders and, technologists from around the world to come here. I think we need much, much, much more of that, though, in the region. What I tend to see, you have founders who are wanting to start companies today, for sure. You still do not have a lot of people who have seen scale.
Yes.
And when you haven't seen scale as a CEO, as a product lead, as an engineer, that means you get to a point and then you kind of need some help. You need some help to come in. And
Absolutely.
So, I think we see that if you look at the pipeline today, a lot of companies in this region tend to get stuck around Series B. And I actually think that's directly related to the talent pipeline today. So I hope it continues to develop.
No, I fully agree. I mean, luckily, we've had a few that have experienced scale, and I think you see ex-Careem people, for example, or ex-Kitopi, ex-Su, going around and launching businesses and so on. And I think these make very interesting founders to invest in. I mean, absolutely. I mean, Maktub, Souk, certainly Careem. What you have coming with Kitopi, and I think in the future with some of the BNPLs. Yes. That will definitely contribute to the success, but when I talk to decision makers, one of the things that I really try and share with them is, listen, let me just share with you the numbers so we're all on the same page about what it's going to take to move these ecosystems in particular from nascent to emerging and ultimately to advanced, which is how 500 categorizes ecosystems. So if you look at Saudi Arabia, for example, at least, kind of the most recent survey that I was involved at, if you look at the number of startups launched per capita, of urban population, it was about 2, right? Okay. Now, if you look at that in the US, it's like over 20. Okay. So there is still a massive, massive gap in the number of startups that are being created every year in the Middle East versus other more advanced markets. Now, that will change over time, but we still need government really providing the platform and the messaging to encourage entrepreneurship and the money, and everything they can to encourage entrepreneurship as
a career path and, is something that's really celebrated here.
Yeah. There's definitely a concerted effort to bring in more talent into the region.
Yes.
I mean, we see it here in the UAE. It's quite clear. Saudi, I think, is doing the same now. What about capital? I mean, you're a US VC. Obviously, you're probably one of the most active here. I don't remember the exact numbers, but you're definitely,
so we've made about 400
there.
investments across the region so far.
Yeah. So how do you, when you are talking to VCs, when these companies advance and they're into like, I don't know, Series A, Series B, and you're talking to other funds, what's the conversation like at this point? Because there was a point where they all came in around like 2020, 2021. We saw quite a few investments, and then we saw a pullback.
Tourist capital, I like to call it.
Tourist capital.
I mean, if you think about it, like for my observation in recent years, let's say the last 5 years, the quantum of capital as a whole to invest in the region, I think has been really healthy. I certainly don't think we have too little capital in the region. However, I would say that the kind of the types of capital is where we need a little bit of variety in the sense that you have seed capital, you have Series A capital. It really starts to narrow when you get to Series B and maybe small Series C rounds. And then you have late stage capital coming from the sovereigns, coming from private equity.
The 100 million, 200 million.
So there's a big gap in who will lead Series B deals in this region.
Yeah.
To me, that is the biggest gap.
So the $20-30 million
exactly.
dollar.
And what we see across, we have seen across portfolios is you see founders getting to that Series B and cobbling together, stacking, convertible after convertible after convertible. It makes a really ugly cap table. It makes it really hard to bring in international investors. So to me, I still want to see more commercially oriented Series B capital in the region. I think we need to start looking at other sorts of debt facilities for fintechs to be more accessible. I think there's some regulatory hurdles that still exist. Banks oftentimes still look at startups as a brick and mortar business when obviously that's not the case. I think that's really important. And then, I think in addition to this, you've talked about kind of the glut of funds that was started in, the up years of 2021 and 2022. I think you're going to see a lot of consolidation. It's really, really tough to raise capital right now as an emerging fund manager or a new fund manager. So I do think, over time, you're going to see the first vintage really mature because the first funds here started 2016, 2017, 2018 in earnest. So they need 10 to 12 years to mature. And after that time, you'll see, who did well, who didn't. And then I think you will see consolidation of funds.
What is your recommendation, again, when you talk to policymakers and governments about that whole Series B crunch? I mean, where should the money come from?
We get asked this quite a bit across the region in particular. If you look at, for example, Saudi venture capital, who we have partnered with before, who've invested in our funds. But I seriously think that if you look at, like a Saudi venture capital or a KVIC out of Korea is another great example, you can have fund-to-funds programs that will truly move the needle for a market. And we've seen that. Now, what worked in SVC and what worked in KVIC was they took truly commercial terms or as commercial terms as they could. So it didn't prevent emerging fund managers who they were strategically targeting at a specific stage. In this case, it was seed, from being able to raise outside capital. So what I would say is if we recognize that Series B or other sorts of capital are still a gap, we want to make sure that, yes, there are still anchors available to invest in those funds, that they're not putting terms on the fund managers that are going to hamper them from bringing in other outside capital because ultimately...
Why are there such terms?
I think it is definitely the instinct of, kind of development agencies around the world to want to put in hyper-local terms. But ultimately, we are wanting sustainability. We're wanting financial sustainability. And you can only have that when you can bring in outside non-developmental capital. And you can only do that if the terms kind of allow for it. So as I said, there's wonderful examples of this with SVC and KVIC in particular. I know Mubadala is doing quite a bit of, really, they invested in some really great funds early on in the region, which was super helpful. So I think we've had wonderful examples of this. I just think it maybe needs to be a little bit more targeted moving forward.
Okay. So since you brought up emerging fund managers, I mean, when we were talking offline, I was telling you I'm looking at raising a fund at this point in time, and 500 Global runs programs for emerging fund managers. What is your take on like the performance? I've heard that
First vintage funds.
Funds like tend to perform really well. Like what sort of stats do you have that you can share?
I mean, it's so fascinating to me. Before I joined 500, I had never raised a fund, and now it's all I think about.
Yeah.
I think number one, just to give a little bit of context for where 500 is looking at this, and then I'll dive a little bit more into your question. So in 2016, 500 launched a program that was called Venture Capital Unlocked, VC Unlocked, in partnership with Stanford, right? And what we did was focus on bringing emerging fund managers, so first-time fund managers, and putting them in a 2-week course at Stanford that is accredited as continuing education, and really exposing them to the technical aspects of fund management. So that can be things like fund modeling, portfolio strategy, of course, portfolio management, fundraising, et cetera, LP relationships. So since that time, we've run programs all over the world. We trained over 1,000 emerging fund managers and investment professionals worldwide. We trained over 100 just in this region. Pretty much every main fund manager that you know, and even on the sovereign side, has gone through a 500 program.
I know quite a few that did that program.
And again, we do that because we want to be co-investing with fund managers who know best practices, who are going to help, to set the right terms. We can come back to terms in a minute, but one of the things that really pains us at 500 is when we see really poor terms being forced on founders in nascent and emerging markets, and education is the way to kind of overcome.
Can you share some examples with our listeners?
One we see all the time still, sadly, is you'll have an angel investor come in and say they want 51% of the business.
Oh, wow.
This happens all the time.
Still.
It's getting better. It is getting better, but it still happens.
This is an angel.
Yes. And as so just founder, to give I understand, right? You don't know.
So just to put a number to this, so for our audience to understand what we're talking about, like for those who are not very familiar with,
So
this is someone investing a few $100,000.
Right. Traditionally, when you're raising, seed capital, so your first round, you really don't want to part with more than around 15%, maybe 20% max of your business. And typically you're looking at a valuation that should be at your seed stage, call it between $2 and $6 million. What happens is when you have a first-time founder, bringing their company to market, they are approached by an unsophisticated investor, and that investor convinces them that their unique access or their past experience merits them having 51% of that business because they want the control.
51?
Right. This is what it's
not
49,
51%. It's
51%.
Yeah, wow,
and
that's
for
crazy.
Usually, a very, very low valuation. And if you're a founder, it's really hard to turn down money. I know that. It's really, really hard to turn down money as a founder. So oftentimes they take it and it makes your business uninvestable for a venture capitalist. Because we need to see our ability for, number one, the founder's ownership to stay commensurate with, the energy they're going to put in the business and the outcomes that they're seeking. And we need to be able to hold our ownership throughout, the life cycle of that company in line with, our fund mandate.
Yeah.
So we want to see healthy terms. We believe that education, not just education, but also getting emerging fund managers in a network with other fantastic fund managers is a way to help them through the ups and downs of, running a fund. And, today I would say 2022, 21, maybe a little bit into 2023, you saw a lot of new funds start. People then realized it's really, really difficult to raise money. And so today, what I tell emerging fund managers around the world is you just have to have a very, very differentiated strategy. You have to have a clear idea of why you have unique access, unique talent, unique insight that, number one, a founder is going to want to take your money, that you can even source that deal, that you can get into that deal, that kind of how to support it the whole way through. And then, raising money as a founder or as a VC, it's never easy to get people to part with their money. So you have to have that skill set too.
Yeah, I think that's a very important point you raised, by the way, about the founders taking your money, because traditionally, at least in this part of the world, it was always like an investor's market, right? Like they were too few, right? And they set the terms. So they weren't like founders didn't have many options. When I was fundraising back in 2016, I think there were like 7 or 8 VCs. Yeah. In 2013, there were like, I don't know, 3 or 4. Yeah. So you didn't have many options. I think today founders have options, and I do agree with you. It's very important, and I see it today on like super competitive deals is that, the founder has term sheets from, I don't know, 3 or 4 funds.
Yeah.
They want to dilute a certain amount. They don't want to take in more cash. I mean, there is this situation when actually for great companies, there's more money,
Yeah.
than the founder wants to take at
Absolutely.
this
And
point.
actually, people are always asking what we see with kind of the downturn that was experienced at the end of 22. And it's like, well, great deals are always going to get funded.
Yeah, absolutely.
The best deals are never going to have trouble raising money. I mean, that's just the name of the game. As a VC, you have to, number one, even be in the know that those deals are happening. You need to be able to get there. You need to be able to provide your value add. So I could go on and on VC fund management, but I think there certainly have been studies. I don't remember who put this out, if it was Carta or whom, but when there is a small quantum of capital, usually their small funds tend to do well.
Like $20-30 million funds?
Yeah, sub 20 million.
Like micro funds.
Yeah, micro funds. It is much, much harder to return a larger fund because the exits you have to be much more substantial in order to hit the multiples. When you're investing a $10 million fund, it's a little bit easier to manage. So I'm always, tending to tell first-time fund managers to start small, like prove what you can do, and then go from there.
Yeah. What about angels? What's the role of angels in building an ecosystem? Because again, when you are here, let's talk about this part of the world specifically. It's still a nascent ecosystem.
Yeah.
And again, angels might not have the right understanding or education or awareness
there's
set
certainly
terms.
the same kind of element around terms, but in Silicon Valley, and then I'll come back here. In Silicon Valley, kind of angel investors really evolved from operators, people who had, run the successful businesses themselves. They had an exit, and then they were coming back because, you want to stay around that vibe. You want to support founders. You might understand the business that or the vertical that they're in. And I feel in this region, as we talked about, there hasn't been a lot of scale yet, some. And I tend to think in this region, the best investors are those who have seen that. And they have seen how the system works here. And they have a value add that they provide to, founders, but they don't necessarily want to run a fund, right? They want to do it out of kind of their personal passion and support. So there's definitely room for angel investors. We want angel investors. But again, we teach angel investing unlocked as well. And it's really important as an angel investor, again, to understand venture math. I tend not to encourage people to invest 1 or 2 deals. Like it is really hard to hit a return from 1 or 2 deals. You really need to be hitting about 40 or 50 deals across your portfolio to statistically see a return. And most people, may not be familiar with that math, but the angel network in the region is certainly growing. I know we have Cairo angels, we have Dubai angels. There's Okal. You have a lot of, Women's Spark in Saudi. I know, you're involved with the great network here as well. So, 5 years ago, we didn't have any of that. I think Okal might have been, around then, but we had very few. And so today I'm happy to see those networks growing.
It's interesting that you mentioned venture math, because it's something that always concerns me when it comes to syndication. So which is what I do today. So you have different people investing in different investments. They might come in one, not the other, and so on. So I typically do like 4 to 5 deals every year, which is not a lot. And some people, let's say, do one of those, and that always worries me. Because I think oh gosh, you know what I mean? They might have invested in the one that's not going to make it. I think, and that's why a fund, at least you have, 20, 30 investments, you're diversified.
I'm certainly the most biased person that there could be on this topic, I think. But even for myself, who gets exposed to ecosystems and deals and fund managers all around the world, I very rarely personally do angel investing. I would much rather back funds. And it's because I know that you may see one deal, let's say, you see a prescription delivery, deal. Yeah. And that's the one deal you see in your market. And there's 100 others that you've never seen. So how do you know what's good, right? And so for me, I tend to want to personally, if I do this, back fund managers who are going to spend that time to look at the 100 deals and then make a call that I certainly won't. Yeah. I recommend a podcast that is by Naval Ravikant, who's the founder of AngelList. It's called Spearhead. It's available on Spotify, et cetera. And just listen to his first few podcasts about angel investing and what makes a good angel investor and what, kind of environmental characteristics need to be present
Yeah.
in order to really kind of see a return. So yeah, it's important. We want angel investors, but they definitely need to know what they're getting into.
So what's the number one thing you tell angels? Is it the venture math issue? Yeah. So be aware that a lot is not going to work out.
Yeah, absolutely. Like, and again, if you look at the best seed investors in the world, we're investing in 2 to 3% of the deals and seeing 2 to 3%, kind of come back as big winners. If you look at, 500's early funds, where we've had top decile performance, like worldwide, so top performing funds, you will have 1 or 2 companies return the entire fund. But from those first funds, we might have made 300 or 400 investments. 300 or 400 investments.
So what is typically the first check of 500 startups? Can you tell our audiences as well about the program?
It varies around the world. So first thing, folks should know, you can receive investment from 500 directly, right? So when you're not participating in an accelerator or when you participate in an accelerator.
Yeah.
A lot of people still think of 500 as an accelerator. We have funds all over the world. We invest when you're in our accelerator and when you're outside. Today, we invest, as I said, from seed, Series A, Series B, and later. And our check size, what is our smallest check size these days? That's a good
Is it
question.
25,000?
No, I think our smallest is probably 100,000 now. Okay. And I think the largest check we've written is 30 million. So it is a huge, range depending on what strategy, what country.
And as part of the accelerator?
We have accelerators all around the world, so it's going to vary.
You get an investment?
Yeah. So our investments out of the accelerators tend to be anywhere from around 200K to 500K, I believe, at the accelerator level.
Okay. Yeah. So they're not, they're not super small. They're
not anymore.
Not anymore.
No,
yeah, because I think they used to be smaller.
Yeah, probably when we first started. But today, we're obviously wanted to make sure we have fair terms for the investments we're doing. And I personally really love accelerator investing because as an investor, it helps you to stay very disciplined.
How long is the
evaluation?
program?
There tend to be about 12 to 16 weeks, depending on the market that we're in. Today, it can be a mix of in-person and online. But for example, like our Silicon Valley accelerator is 100% in-person. A lot of them are 100% in-person. I think our Saudi accelerator, which invests in companies all around the region, not just Saudi, I think that's a mix of online and in-person.
Okay. Sorry, you were saying a point about valuation, about the accelerator model.
Yeah. So I love the accelerator model as a VC because, if you can show your value to the companies, they're coming into the accelerator at typically a pretty low valuation. As I said, it can be kind of 2 to 6 million range, but they're doing that because the power of the 500 network and training to be able to, put them on the path to raise funding, to grow. Yeah. You see the success of our portfolios around the world. It makes it worth it for the founder to take, perhaps a reduced valuation. So it's a great investment model as a portfolio strategy, and it's one that we've seen, do really well. And when you look at kind of the craziness of 2021 and 2022, when people were investing at really, sky high valuations, when you have an accelerator model, you kind of miss that. Our investing stays consistent. We show consistent performance and consistent returns based on a consistent deployment strategy, and accelerators help with that.
So for 500, it's, again, in terms of eligibility, it's not idea. It's you already have a business.
Yeah, at this stage, it tends to be the companies who are coming into our accelerators already have pretty good traction.
Pretty good traction. Okay.
Yeah. When we first started, I think perhaps it was a little bit looser, but just the volume of applications that we get today.
Okay.
It tends to be very competitive.
But then, would they have been self-funded, or would they have had some kind of?
In some deals we're the first money in. In other deals, they've had perhaps friends and family, or they've self-funded a little bit.
Okay.
But it would be rare for us to invest just in an idea these days.
Okay. So tell us about the pitch, the perfect pitch. Yes. How do you get them to pitch so well? I mean, can you share some tips with everyone who's listening?
Having gone through the accelerator myself back in 2012, I was just at the Riyadh demo day and kind of doing a pep talk with the founders right before they were getting ready to go on.
What do you tell them?
I literally said to them, listen, I remember as a founder getting ready to go on that stage, and my knees were literally shaking. Like, I was so nervous, but it gets drilled into your mind. You practice that pitch so many times. I mean, you're saying it in your sleep, you're saying it in the shower, so we really work hard to, number one, this is what I tell people, have a very clear narrative. So 500 does an amazing job of helping founders hone in on their narrative, on the core value prop that they, want to stick with people, and taking them through the journey in a way that's digestible in 2 to 3 minutes. So we want to make sure that it's really understandable, really digestible, and the ask that's being made is super clear. And then
they have 2 minutes?
It varies by accelerator, but it's around 2 to 3 minutes. Yeah. One of the kind of beautiful things I think about 500 is so many of us have worked together in some form or fashion for so long. Like there's just this very strong curriculum that exists today. And the way that we're teaching pitch training here is similar to what we're doing in Silicon Valley, similar to Mexico and Georgia and wherever else we do it. So this method has really just been honed to help focus on the narrative. And, something I still remember back from the batch that I went through was somebody saying at seed, you can raise on vision or traction. Oftentimes we at this stage are really pushing people focus on traction. So your narrative should be getting to whatever traction you have as quickly as possible. And then making sure that you are articulating why your team, why are you, the person who's going to continue this traction forward.
Yeah.
And it creates a really compelling narrative. And the other thing is the 500 brand has always been like very, very founder friendly, very warm. And, we try not to take ourselves too seriously with the founders, during demo day, because they know they're already under so much pressure and so much stress. But we try to make it as fun and like warm for them as possible. So it tends to be really just a wonderful time for everybody. And I think that shows in their pitches and why, I think they do so well.
Yeah. Yeah, no, they do really well. So articulate, your value proposition.
Vision first. So make
and
sure
why
your narrative has to be super tight. That you're either really focused on either vision or traction. For us, we want to see mostly traction. Why this team? And make it memorable as well. People identify with a story, they identify with a feeling that they're having as you're pitching. And then, we always make sure that we set up demo days where they have time to talk with investors afterward. And then most importantly, you can have the best pitch in the world, but if you do not follow up with investors, then it was all for naught. So we really train our startups and our founders to focus on the process of fundraising and seeing it as a process. I have a series that I do on Instagram that I launched earlier this year that has done really well. And it's called Stuff I Wish I Knew, 10 Things I Wish I Knew as a Founder. And, I try and really focus on those things that I learned as a VC that I wish I would have known. And one of the big things is just follow up. VCs are busy, angels are busy, but you stay with it during the process.
What's the follow-up etiquette?
Kind of 2 things. Number one, I think in your follow-up, you need to just be really concise. I know me and other VCs, when you get like a 6-paragraph email,
no,
like put whatever your need or your traction is in the subject line, 3 bullet points, next step, that's it. I personally, we never want to be asked for NDAs, for example. We can click through on DocSend. I know there's debate on whether you should send a deck right away or not. I send a deck. Just make it as easy as possible for somebody to opt in or opt out of future communication. And I can't do that without a deck. So I always want to see just a few bullet points. I want to see the deck and then, know what you need from me next.
Okay. I want to talk a little bit about. I know I've kept you here, for quite some time now, but I'm really enjoying this, and I think there's a lot of value out of this conversation. I want to talk a little bit about women in tech. So I read a stat recently that only 11% of decision makers in VCs are women. Less than 3% of VC funds go to female-founded companies. It's one of those subjects that you, especially as a woman, by the way, I don't want to talk about it because I always feel that there's always this kind of women entrepreneur narrative and its own kind of box, and it's kind of separate from everything else. And I always like to think that we are entrepreneurs. We're not female entrepreneurs. Yeah. So actually the word female entrepreneur really bothers me. But I mean, there is a problem.
Yeah, so I totally get it. I have had both, thoughts as well. I actually remember one of the first times I was going to come to the region. And I was supposed to be giving a talk somewhere. And they said, well, what do you want to talk about? And I said, I want to talk about women in tech. And they're like, oh, no, everybody's over that. And I'm like, No. Everybody is not over that. As you said, 2% of capital goes to women. There's hardly any female LPs. We'll come to that. There's very few female fund managers around the world as decision makers. So it is still a really, really big gap. And if we don't acknowledge that gap, then I think it makes it harder for other people to have an awareness of the fact that this is not only affecting, representation and what other women see themselves as or what they can be, but also performance. Harvard put out a study in 2018 showing that female investors outperform male investors across venture. Right. So this is not just a societal issue. It's a performance issue as a fund manager as well, when you don't have females writing checks in the same way that you have, males writing checks. So, my take on it is particularly if we look at startups. Yes, it's accurate. 2 to 3% of capital goes to, female founded or co-founded companies. But you have to acknowledge the entire chain of venture. So as I said, you have very few, kind of decision makers at the limited partner level. So, for your audience, limited partners or LPs are those who are investing into funds. Funds are then led by a GP who then makes the decision to invest into a startup. So you have very few, female LPs who are decision makers on which fund managers are going to get funded. You then have very few female GPs or IC members. For those, who are new to venture, IC is investment committee. You're deciding on behalf of the fund, who is going to receive investment. And then, lo and behold, very few females get funded. So all of these things, I think we need to acknowledge that we want to see greater involvement from females at every decision-making level across venture. I think the Middle East has actually done a very strong job at advocating for women to be involved in venture. If I can just, use our stats, for example, obviously we get called 500 women all the time in this region because we have so many women. 60% of our firm worldwide is female. Obviously, we're led by females at 500. And we have several female GPs around the world. I believe our latest batch out of the Seed Accelerator in Riyadh was over 50% female. Our portfolio is 30% female here in the region. So it's not a pipeline problem. There are plenty of excellent deals to fund with female founders or co-founders. And I've already shared some of our performance stats as well. So, I don't think this is a pipeline issue. But as I said, I think you have wonderful examples of females being involved at decision-making levels across the region. We work really closely with Saudi Venture Capital, and Nora Al-Sarhan is the CIO there. She's incredible. Now the deputy CEO at SVC. You've got other fantastic decision makers. We work very closely with Sarah Al-Mubarak out of Sanabil, who runs their kind of sector development and is investing there. It's really wonderful to work with. And you have examples of women in LP decision-making roles around the world. We want to see more of this, not just in this region, but I actually think the problem is much more outsized in the US than it is here in the Middle East.
So you don't think there's a pipeline issue? So you think it's basically the people it's an issue of the people writing checks?
I think that's probably more of a consideration than what people have given it credit. I do think culturally, in any part of the world, coming from Texas, culturally, the message I felt like, I received was, women tend to be homemakers, who tend to be nice, they tend to be pretty, they tend to be quiet, A, B, and C, all these characteristics that may or may not align to, jumping into starting your own company. Certainly, when you're a mom, we have a big part of the child rearing responsibilities all around the world, and that can make things difficult. But we just had a wonderful story. I was so excited. There is a founder of a company called Metric, a Pakistani, really, really wonderful Pakistani woman who participated in the Sanabil 500 accelerator. She has a 4-year-old little girl. She brought her 4-year-old to the accelerator every single day, which I love.
Yeah, I saw her post on LinkedIn about it. Yeah,
it's so cute. And Christine, our CEO, is the first female VC that I ever met. And I will never forget, as a founder, going to the 500 office and seeing a nursing room. I was like, oh, okay. Like, there's a mom here. There's a nursing room here. Like, it's okay. And even for me, like back then, as a young mom, I didn't talk about having kids.
Yeah.
Because I already felt so different being a female, let alone a mother.
But should you? I mean, I had a guest 2 episodes ago. She started her company when she was on maternity leave. So she had just had her first baby. She coincidentally met her co-founder and she decided like she wants to start a company. And when I asked her like what did she say when she went fundraising, she said she didn't talk about it because I mean she didn't feel that it's something to be talked about, you know.
Yeah,
like,
I mean I think every woman just should decide what works for them personally. Like if I've been in that situation where I didn't, you know, really want to talk about it because I knew that the questions I were going to get may be, you know, pretty not helpful. So I think that's a reality that women are forced to deal with, is what is going to be the response on the other side of the table. But again, you know, I love that you're asking this question. I love that we still talk about these things because it's really real for all of us. As women, we can choose how we deal with it. But, you know, I think it exists. And there's nothing wrong with acknowledging that this is still a challenge that we face.
Trying to think actually about my record, which in investing, which I think is dreadful. I think I've invested in one female-owned startup out of 16. It's interesting. You say it's not a pipeline issue. I see a few, but I don't see as many that are female-led. So not sure.
Yeah, I mean, I think again the volumes that we deal with are a little different than pretty much everybody, but. But the other thing is, you know, somebody asked me the other day, it's like, I do think the fact that perhaps, you know, 500 is female led. We have so many female GPs around the world.
Maybe attract more women.
I do think we probably, we may, you know, attract more for that reason. I don't know, but that track record of, you know, investing in a high amount of female founded or co-founded companies, like that is really inherent to who 500 is. Right? Christine, as the co-founder, had always been of that mindset, right? And I just think that's one of the things that I really love the most about our culture is it's very much been a looking for underrepresented talent, right? We've done that geographically, we've done that demographically. It is just kind of who we are, and I love that. And you know, as I said, our performance has been incredible.
So as a mom of 4, what advice do you have for female entrepreneurs? I mean, you started a business. You said that you had the baby at the time, correct?
Yeah.
You have young kids. So what is your advice? How do you do it? Like, how do you deal with like the travels? I mean, you have a global role. You're traveling a lot.
Yeah. So I think, you know, I would definitely give different answers by the various ages that I was at. When I was really young, you know, with my first baby and my first startup and all of those things, it was like there was no magical formula. It was just whatever I could make work that day. And sometimes it really was not pretty. But, you know, I think one thing, you know, not to get too pedantic here, but the people that you surround yourself really, really matter.
Yeah.
Certainly, you know, your partner in life is, you know, as a female entrepreneur or you know, VC or any female in a leadership role, you want to make sure that whomever is in your support network is going to rally behind you, believe in you, and, you know, want to see your success, whatever that wants to look like, because that's your tribe around you that you really need. And it only becomes 10x more important when you have children. I also think that, you know, it's just, we were talking earlier, and I think it's very normal for moms to have mom guilt, you know, about being gone. I certainly do. I get asked questions all the time, but there's a lot of upsides as well for kids to see parents who are fulfilled in whatever that looks like for you. A story I like to share. So I have 4 kids aged 22 to 5. The 2 middle kids are girls, and my 10-year-old, her name is Maddie. And we went to her open house, and on the wall, it was showing all of the pictures of what the children wanted to be when they grew up. So, you know, we had firemen, we had football players, we had doctors, etc. And then Maddie drew a picture of herself in a dress with dollar signs all around and said, you know, she wanted to be a VC. And then in quotes, to be a VC, I need money.
Yeah.
So I thought, okay, well, you know, she's at least getting the fact that like this is a career option for her. And she loves to tell people about what I do. And
Yeah.
And, so I think the best we can do for our kids is just, model whatever for us fulfillment looks like.
Yeah.
And, I think we're always going to have mixed feelings, but I would also have guilt if I wasn't doing what I loved. So, I want to make the best of this time that I have on the earth. And I think my kids will be better for it.
Yeah. Well, that's great advice. That's really great. I'm going to wrap with some rapid fire questions.
Okay.
Just give me whatever answer comes
Sure.
to your mind. Would you rather be an investor or an entrepreneur?
Well, that's a hard one. Entrepreneur.
Okay.
Which I do feel like I get to do at 500.
Yeah. What do you do to de-stress?
Netflix.
Oh,
Eat.
good. Oh, okay. That's pragmatic.
Yeah.
Okay. Something that upsets you.
Oh, I think anytime somebody isn't kind, I would say that's what really with my kids. If they're ever not kind to each other, that will set me off. I'm generally very low key, but I can't handle that.
Kindness. Okay.
Yeah.
So you want people to be kind. Something that you love about people.
Resiliency, I think, especially in my role where I get to spend a lot of time in countries all over the world. There's very, very different circumstances than, certainly what I grew up in. And I've just seen so much resiliency. And I think that is just always so inspirational.
If you could time travel, would you go to the past or to the future?
Okay, well, I am a nerd and very obsessed with Tudor history, monarch history, the whole Elizabethan era. So I think I would go back to the 1500s.
Okay, 1500s.
Yeah.
Okay, cool. What is the best gift that someone has ever given you?
Oh, wow. Well, my now 7-year-old, Ellie, she made me a bracelet for, I think it might have been Mother's Day. And it was a bead bracelet and it had all my kids' names on it. It was really cute. And she was so proud. So the way that she gave it to me and, what it was, I thought it was really special.
Okay. Well, last question. Favorite vacation spot?
Ooh. I did just come back from Greece and it was spent a lot of time on the ocean. It was beautiful. So I think for now, I would have to say Greece.
Okay.
Yeah.
Well, thank you so much, Courtney.
Thank you.
It was a pleasure to have you.
It was really amazing to get to chat. And again, I think this platform is so important. So please keep doing it.
Thank you.
Thank you.
Thank you so much for tuning into this episode of Conversations with Loulou with Courtney Powell. I hope you enjoyed it. As usual, check out conversationswithloulou.com to listen to all the other episodes. Make sure you are subscribed wherever you are listening to this podcast or watching it so that you get notified anytime a new episode drops. And please do leave us a rating and a review. It really helps in getting the show discovered. See you in a few weeks.